I'm a senior managing director at Goldman Sachs. So my role is to execute investments across Europe. I've been in Goldman Sachs for about 20 years. But I have a bit of a more regional role in Europe, but also a bit of a global role where I sit at our investment committee. I run our strategy council within the real estate group, and I'm also fund manager of our global value add fund. The main discussion today was around the debt market in real estate. We brought, my colleague Oksana Bereth, who's our global head of capital markets. She sits in Dallas, and she came over to Europe for the discussion. I would say the key takeaways from the discussion today was that although there has been a lot of restructurings going on, in particular in the office sector, there has been a limited number of banks taking assets back. We're now starting to see in the US a little bit more, short selling happening in offices, but not so much in Europe. And then maybe the other takeaway is that there continues to be a huge disparity within asset classes. So office where no liquidity, no bank wants to finance, and then housing and logistics on the other side where there's a lot more liquidity, investors, but also lenders kind of are keen to get more exposure to that. Let's say as a European investor, if I think about my concern going forward in Europe, and I wouldn't say it's so much a concern, but it kind of is the reality that we live in, is that I think that to create returns in Europe in real estate, where it's likely to be a low growth environment and where it's unlikely for us to benefit, there'll be some adjustment of interest rates, but after that, once you've underwritten that, there's unlikely going to be just a sudden drop of rates like we had in the previous cycle. Returns are going to have to come from value creation, and so I think not so much. I think it should be a concern, for if you're trying to just play the cycle, because I don't think you're going to get to make the good returns based on that. But to us, that's an opportunity, and so it's an opportunity to go into an asset class where there is a lot of a possibility to create value. Whether it's operating the assets, whether increasing the sustainability of those. And so I think, that's the kind of concern and opportunity that I see in this next investing cycle in Europe. I would say we're cautiously on the buy side, yes. Buy side for the right product at the right price, for sure. So we're, very carefully analyzing opportunities and entering when we think we can do so at the right basis, and in assets where we think have the right fundamentals, but also where we are able to create a lot of value going forward. If you judge the GRI numbers, it's certainly improving. I've been part of this council that GRI created, and I think we started working on this 2 years ago. And we've come up with different initiatives together with GRI. One of them was to offer a 50% discount to new joiners who would be women, and that was a way of GRI pitching in, but also just kind of telling leaders around the world, look, we're going to pitch in, but you guys need to do your bit, which is just bring more women to these conferences. And if we judge by that, I think the numbers were, they showed it on the graph. I don't know the exact numbers, but they were astonishing. The growth over the last 2 years of women in real estate participating in these conferences, which implied some sort of seniority. They're actually very, very, very strong. So look, I think there's a lot more to do because when you really do look at executive positions, not just at the board level, but people who are really making the decisions at these firms, we still have very few representation of women, and so that's the part that we need to get better at. But I think there's certainly been it's very significant evolution. And I think events like this one, I think you were asking. Look, I think they're highly beneficial. They're beneficial because of the network effect that they create. when women, first of all, they continue to be a minority within the real estate industry and the finance industry more broadly. And so networking by definition is just harder for them. Many times they have some other family obligations. That means that they might not go to the typical drinks. And so creating events within the professional setup, even within business hours, where they can relate to other women and frankly make friends and create relationships that are going to be very beneficial when they try to do business. I think those are very, very positive for their career development.